Hey guys, this is Chuck Crisco with Wealth is for All, your tropical trader. Got my cool necklace on from the beach, and I wanted to spend a few minutes today talking to you about one of the simplest, most effective styles of trading that I have found. It is what I am doing now on a regular basis, and just wanted to share it with you guys as well. A summary. Want to make sure that you go to, as an IML customer, you want to go to Christopher Derricks on IML Live TV or the recordings and watch his setups, watch his teaching. Also in the IML Academy under technical analysis, you'll find him teaching several of these topics there as well. That goes into more detail. But I wanted to put it kind of all together in one place to give you a handy tool so that it can make your trading more effective. I'm finding that when I'm using Christopher Derrick's style of trading, it's very different than a lot of the other ones. There's less losses, there are more gains, and I found it to be really, really effective. So let's get right into it today. Number one is market overview. So how do you find the pairs to trade with Christopher Derrick's style of trading? I'll explain it here in just a moment as to how it works. But in terms of looking for pairs to trade, where do you go? Where do you look? Well, there's a number of places you could start. Number one, you could use Stevenson, Lindor, when he's on twice a week, I believe, currently. And you can get a sense of where the trends are going. And as a result, you know where you can kind of jump in and know, because this particular style is trend trading. So he's trading from zone to zone to zone. And so you want to just find out where it appears to be a trend. And that could be one way of doing that by looking at Stevenson Lindor. Secondly would be to watch Christopher Derrick. He does the London session. It's 1 a.m. currently, Central Standard Time. And I just set my alarm. I get up and watch for an hour, and then I go back to bed. A lot of those pairs are still good by the time I get up that morning, unless there's just something right then and there that I feel like I need to jump into. The third way, and I'm finding is the best way, is actually finding what is going on right now in the market, whenever right now is for you, because some of you can't do the London session. Obviously, some of you can't do certain times of the day. You just have a window of time. And so what you can do is just do an analysis of the charts during whatever time you have, and just find one that looks like the best setup, which we'll explain here in a moment, the best setup for you during the time that you do have. And one of the things that does is it sort of, it keeps you from having to have alarms. I've got like this elaborate setup for gold, for instance. When it reaches a certain threshold, I get a phone call that alerts me to wake up, and because if I'm asleep, I may not see it pop up on the phone. There's so many problems with it being complicated to find the right one that you're looking at a certain time of the day. And this way you are just looking at the opportunities that are before you right now. So you can do an analysis. One of the things that he does is he only trades one pair at a time. It brings simplicity to it. So you find that particular pair, it looks like a good setup. You get into that trade and just stick with that one trade and manage that until you are done with that, or it gets into profit, maybe 30 to 50 pips in profit, and then maybe adding another pair after that. So that way you're not trying to manage too many things at one time, and you can just, you get 50 pips a day. That's 250 pips a week, which is about 1,000 a month, which you can flip your account monthly doing that. You can really build up your account percentage-wise by doing it that way. So let's get into, I'm going to share my screen here for a moment. Let's get into some of the how to do Christopher Derrick style of trading. All right. So again, Christopher Derrick style is simply trading. Now I have marked off, and I'm not going to necessarily teach on support and resistance. You can go to the academy and look at that. You should already know that by now, gone through the basics as well. But here's some simple support and resistance lines. Now, Christopher Derrick is going to draw zones because zones are really more accurate. There's a little bit wider range because these wicks include a zone. But for time's sake, I've just drawn a few lines here as support and resistance lines. And as you know, support is your where the price tends to bottom out and then reverse the other direction, and resistance tends to be that area where price resists breaking through and it pauses in these places here. As well as it seems to be a consistent, as you see in this here, these lines, you see that there is an area of support or area of resistance that is consistent throughout the charts. And this pair is a Euro USD. We're going to use that as an example. Again, I'm just going to be quick, but you can see here, actually, let me move my screen. Christopher Derrick style is zone to zone, and it's based really on the pullback or the retest of the previous area of support. So in this example here, we have a reversal, and we begin a new trend here as it makes its way up to this, which was a area of resistance support before. It was an area of resistance before. You notice the candle comes up, hits that area of resistance, it comes back down, it retests this area here, and then goes back up. So what would Christopher Derrick do? Well, his method is very simple. You're going to enter in to the trade at this place of a retest, where it comes down and retests or has this pullback. And that place right there, this is where your entry is going to be. Now, you're going to enter two entries at the same time. And we'll come back and talk about that in a moment. But he'll use the 1 hour chart, looking at the 15 and the 30 as well for confirmations, getting it just a little bit closer in, and able to identify some of that a little bit better with the candles. So you would enter in the trade here. You would take two trades. You can watch the power of twin trading in the academy under technical analysis. And in those two entries right here, they begin to move up. Once it gets to about 10 to 15 pips in profit, you're going to move your stop. Let's just, for the illustration's sake right here, actually that won't work. For illustration's sake, let's just say that your stop profit or your stop loss is generally going to be 20 to 30 pips. Well, how do you know which one? Well, it's at your discretion. A lot of times I'm just basing it on where that next zone is. So about 30 pips below. Let's see what this one is here. And this one's only about 16. And that's 36. So I would have my stop loss somewhere down here. So once these two entries get in about 10 or 15 pips in profit, you're going to take your stop loss and move it about 2 pips above your entry, so that now if it were to reverse back and these candles went all the way back down here like they do over here, once it goes all the way back down here, you are still in profit. So you haven't lost anything. This is going to raise your level of success, even though it's only a couple of pips. Loss after loss after loss can, throw this whole thing off for you in terms of percentages and success. And so you're going to move your stop loss into a stop profit. That way, if it comes back on you, and you do get stopped out, you will be being stopped out in profit. Now, with these two trades, once they reach about 30 to 50 pips in profit, you're going to close out one of those trades. And so that one is free and clear. It's your win. You got it. It's yours. All right. And this example here, this went up about 56 pips. So about 30, maybe right in here somewhere, 30 to 50 pips, anywhere in the range of this right here, you would have closed one of those trades out. All right. That left you with one that's still open. This one pulls back a little bit and it makes its way back up, and then it reverses. If you got out here, great on that second one. If not, then it would have pulled back here and probably looks like you would have been stopped out with a stop profit on that one. So you would have had 2 pips plus the 30 to 50 on that first one. So that's 32 pips or so that you would have gotten on that. All right. So, but you would win. That's the thing. You're allowing one to if it doesn't stop out, it's going to just keep on riding all the way up this trend. If it does get stopped out, it's going to get stopped out in profit. All right. Now you see I highlighted entries here. So if it would have come down here, you wanted gotten stopped out, then you would look for that re-entry. And here it tested and went back up again. So then you could have re-entered here. You would re-enter twin trades again and start the process over again as it made its way up. And again, as it got to 30 to 50 pips, you would close one of those out. As it got to about 10 or 15 pips, actually, you would have moved into a 2-pip stop profit. Then at 30 to 50, you would have close out the first one, let the other one just ride. In this case, it would have gone, we're looking at here, would have gone about 151 pips. So that would have been 151 pips plus the 32 or 52 that you got over here. So you're talking about over 200 pips with just 2 entries here. And it's really simple. This is all about entering, and you could enter back into these every time that you get the pullback here, and retesting an area of support in terms of when it's going up. Retest this area of support here, and you could enter 2 more here, and just continue that process all the way up until it reverses. So you're looking for, well, that's not the one I wanted right there. Here. So you're looking for, so it's going to come up. Well, I must be getting the wrong one. Oh, I see. It's a properties. We're going to get this just a second. Trendline properties, parameters, take that off of array. There we go. And I want to change the color on that. Trendline properties, visualization, common, red. Let's see how that looks. All right. So you're essentially looking for it to come up, pull back to an area of support, retest that area, and go up again. It's that simple. Your entries are in the place where it retests. Now, the other way he does this is he uses Fibonacci. Now, Fibonacci is an incredible tool. You'll do a search on the internet for Fibonacci, and you'll see that every area of human life and existence and in creation, the Fibonacci numbers are at work. And it's the same in trading. It tends to be areas of reversal areas, support and resistance areas. And you'll find that the way Christopher Derrick uses it is very effective as well. Now, he does it a little different than what other people do, because what they do is the complete opposite in terms of the direction. Now, so you'll have to kind of relearn. I have to mentally look at my notes each time because I learned it one way and he does it a completely different way. And yet, when people ask him, well, why do you do it wrong? He said, there's not a wrong way to do it. And his method and way of doing it works, and it makes him a lot of money. So, the proof is in the pudding. So when it comes to Fibonacci, he's going to move in an uptrend from ceiling to floor and a downtrend from floor to ceiling. All right? Uptrend is ceiling to floor, downtrend is floor to ceiling. So pull up the Fibonacci. We've got, let's say we're working from here, and this is an uptrend. We're going to go from ceiling up here to floor. All right. So we see some of the key numbers that he uses is the 86, 88.6, 78.6, 61.8, and 38.2. So let me find this here. So let's zoom in a little bit. Maybe a little bit too much. All right. So this from here to, let's say we're here in an uptrend from floor to ceiling. Where does it come back to? It comes back to the 50. It wicks down to the 50, but it really hits more close to the 61.8. And you'll find that that is one of the major areas to help bring confirmation. So the Fibonacci is used, the 61.8, 38.2, 78.6, 88.6 are really just, you're looking to see, okay, does this entry here, this pullback area here, is it sitting on one of those Fibonacci levels? And if it is, then that's an additional confirmation to help you to know, yes, this is a good place to jump in. So here we would have seen 61.8, and you'll see that he does that all the way through as a way to bring confirmation to the trade. So when it, let's see if there's anything else here you need to know. Really, it's that simple. Now, when it reverses, so how do you know what happens if it's going to reverse? Well, you just might possibly get into, let's say you got in here, it came down, you see here's the, would have been an area where you see it's pullback, and as it makes its way up, well, what did it do? Well, it never went past this area again. So you have a reversal. But just to make sure so it's not consolidating, often what he will do is when it's making its way back down, you're looking, he'll skip this zone and this zone and probably would come somewhere like this, down, just to make sure you're getting plenty of room there, and this way. So he would be looking for something like that in order to jump back in on the downtrend, instead of immediately just jumping in, which you can do that sometimes, but this is just an extra measure of protection. So it's really that simple. So review. Number one, finding pairs. What's happening now? Look at your charts for today. Draw up your charts. You're looking for something that's trending. not a lot of, that doesn't look like it's doing a consolidation. Look for draw up your zones, look for your Fibonacci to help give you a sense of where that pullback, is it hitting that area? Is it a zone? Is it a support area? Jump in there with 2 trades. Now, 2 entries does not mean double the size. It means taking whatever your risk is, whether you're doing 1%, 2%, 3%, and divide that in half and do your lot sizes accordingly. So then as it goes up about 10 to 15 pips in profit, you're going to move your stop loss up about 2 pips past your entry. So now it's in stop profit. And then once it gets about 30 to 50, you can move your stop loss up again. But you're going to close out one of those trades, and the other one you're going to let run. So in which case, I guess earlier in my example, when it got to about 50 pips, you would have already moved your stop loss up some, so you wouldn't have caught this whole reversal back here. But this reversal, then when it does reverse, you look for another opportunity to jump into the trade. You're going to jump in with 2 more again, and the same process as it moves its way up. You're going to use your Fibonacci as confirmation, your zones as confirmation, and the great thing about it, if you're using the right lot sizes, you can lose 50% of the time, and you're still going to be making money because of the wins are going to far exceed your losses. Your stop loss is going to start at about 20 to 30 pips, depending on the zone above it or below it. And it's as simple as that. So I'm going to put a whole bunch of links in the bottom that will point you to some of his videos where you'll find more examples and illustrations from him, from Christopher Derrick himself. But wanted to give you a quick summary so that you would be able to quick reference this and see how simple it is. Hope you have a great day. Again, this is Chuck Crisco with Wealth is for All, and blessings to you.